Greetings, everyone. Happy Friday, March 21st, 2025. Happy to be with you here. Trading trends. We'll see what happened on the week. SPY, a pretty flat week when all said and done. You did get a little bit of a contraction volatility, which is what you'd like to see. We'll take a look at what happened today, kind of an international day, some pretty wild things happening. And let's get into it. Hopefully everyone have a good weekend. Some diffuse some kindness to people. Still on baby watch. Rocco's not a part of the show. He peed on the on my son's high chair upstairs, so he banned from today's episode. This is pretty. I don't think anyone's going to be offended by this, but pretty wild photo. I still love AI for reasons like this. This is wonderful. So today, a place that did shield you really in a nice way was India. India's been a great spot all week, but the thing has been a dog. Ironically, here's a picture of an elephant. But Indian market has been an absolute dog. We'll take a look at the chart. And Turkey, excuse me, collapsing by 7%. They arrested the mayor of Istanbul over there. There's some crazy things happening with Erdogan, and there's protests in the streets. Crazy things happening with the currency. Crazy things happening with my throat. Excuse me. So that index market. Excuse me 1 second. Go Phillies. Opening day next week. Yeah. So Turkey, that market, we'll take a look at it, down by 7%. A very dramatic fall. Silver, and if you own the silver and home construction today, those were off. Home construction to a new 52-week low. So that thing looks super weak. We said it wasn't going to rally much, and that thing hit a new 52-week low today. And really, when all said and done, when we look at it for the week, I'll take a look at the biggest six movers, 3 up, 3 down. When all said and done, from last Friday to right here, big drop in volatility, about 5%, similar drop in natural gas. So that continued to come in, and you had a 5% rally on the week in India. I won't tease the rest of the show with, what are the best trades, best performing trades of the past 52 weeks. My favorite part to do on the Friday show. And it's, we've been talking about them. So without further ado, before I choke on y'all again, let me get to the intraday first, but really fast. We'll go on the stock moves. Pretty flat day in the market. SPY closed down small, about 25 bips. Volatility came in also a little bit, slightly above average day. Today was options expiration, and you had futures as well, different markets. So Tesla up 5%, Apple up about 2%, Meta similar percent, Palantir up 4%, back regaining a 90 handle, Microsoft up 1%, but this thing still looks awful. Micron, big drop, down 8%, yet NASDAQ still continued to rally and close up about 1/3%. Netflix up 1%, we'll call it. Boeing, this looks like a strong stock here. It's really one of the better performers in the market. Ticker BA up 3% today. So as I X out of that, now we look at the intraday chart. So we sold off at 8:30 down to about 5:59. I'm looking at the SPY chart here. We continue to bottom to 10 a.m. at 5:58. This pretty strong, firm black line here is the 200 bar moving average I have. So each bar representing 30 minutes. Essentially, the chart goes back 4 days. So that resistance there is at 562. We really had a surge of buying at noon. I believe then it was said that Trump was saying that there's going to be flexibility on the tariffs. Everyone's counting down till April 2nd because, come Monday, we're not very far at all. And what is going to happen and so on and so forth. How punitive is it will end up being a good deal for the United States in the long run. And we're dealing with the short-term turbulence, short-term pain, as Besant, I think, is saying. So we ended up rallying here on that comment. Around noon from 559 to 563 on that alone. And we held much of that gain through the rest of the day. We saw this last Friday as well. Instead of selling and being afraid of going into the weekend long, they actually bought a large amount of equities here towards the close. 562 to 565, they propelled it, and we ended up closing at 565. VWAP there at 562. So good on the day. A nice kind of a battle. It was down 25 bips. But could have been worse, especially near those lows at 560 handle. As I zoom out here, so as I said before, I was looking for a bullish accumulation phase, but with a lot of turbulence really was the word, with a lot of difficulty to try and get to that 575 number. As you can see here, the 200-day moving average is gaining by about 18 cents or so, and it's right there at 573.5. 574 half is a 21-day exponential moving average. Very important. I fear that we will have some more bullishness for the next week. I don't think it's obviously going to take the lid off of anything. But I think we get to right around that point, 573.75. And the sad part is sad. No, but the worrisome part is, old resistance becomes new support and old support becomes new resistance. So I fear what we had in the bag, essentially, it's a 10-month average and we're in March. So essentially, and rising, right? Look at that slope. So it's going to be a little bit difficult. I think we're going to have to really tussle with this, and it might take really some time to really overcome this. We'll take a look at what other markets are saying, but really, again, in the short-term forecast, again, I see a little bit more bullishness for the next week. I've been looking at March 28th to end this cycle, and that's going to take you right around 575. Got a single stock request. Very nice. Welcome, Gaston. Visa. We will look at it at the end. Word. So that's my call for the next week. So good in the short term, right, where it's 564 here in SPY. I see us being a little bit magnetized to that 573 area, about 9 points away. That's a little bit around 2%. It's going to come with volatility, but I do fear that might be it for the markets. And then folks will really start to be concerned, including myself, because we had said this is day one of the change, this March 10th. Today's the 21st, and we still live under this very important 200-day marker. So that's going to continue to be just fundamentally a sell the rip environment. You can't technically, that's a lot of a dead cat balance. You got to understand you were 550 just 8 days ago. This is a rally all the way to 564. This is going to be hard to overcome. Not even in addition to just a technical, quant level of 573 half, the 200 moving average. These are also important levels going back to where we had that January low, also coincided with the highs back from October. So I don't think it's going to get there in 1-2 days. Again, April 2nd is going to be a big deal on the tariff. So if we get a delay, it could obviously review and rechange sentiment about the United States and going forward. So you might have a lot of fear come off of investors. So we'll see. Again, short term, I see about 10 points upside, and then mean reversion to slight correction to going a little bit downside, because this is still not the best game in town. It will be again one day, and I think soon. I'm not throwing the towel on an absolute superstar. You cannot. That's silly. But the time right now, this is having this is going to take a longer oopsie, considering it fell out of bed March 7th. This could continue till first week of April, right around the tariff date. Maybe you need the JP Morgan and the corporate earnings that begin on, I believe, April 13th to turn things around. Maybe it's a combination of that, and maybe we stick on Nvidia's every last word and they say something positive. Although their glimmer has faded lately, but anything can happen. We get above here, but it's going to take a lot. 200 days still continuing to rise. I think it's going to be okay, considering we have a little bit more bullishness, I think, for the next week. But it's going to be resistant there. That 575 level is going to be very hard to overtake. All right, enough of that. Let's go over the big movers this week. There were plenty. Let me look at the doc with the elephant dancing in the rain. It's a cute image. Kind of looks like Dumbo. So the illusion is there. The example there is India. India, a big day today, up 1.4%. But this market has absolutely fell out of bed. September, I was screaming about it on the show, one of the best markets to be. This was correlated very much with gold at the time, and gold was hitting new highs and was trading well, as was India, and it was kind of a nice trade together. And then, if you recall, this thing really fell out of bed, clearly lower highs here, and then it almost had a reversing of what we're doing with the S&P here. The oopsie was here. This wasn't its true character, but it did have a nice ascent, especially for a lower vol market like India. And then really timeout right here when the Fed cut here in the States, December 17th, and there was a allocation of investor dollars globally, and what that meant for yields, what that meant for gold, what that meant for the US dollar. Things changed for India December 17th, and this thing's been going south ever since. It's bottomed 52-week low March 4th, just about 2.5 weeks ago at around 47.5, and now it's had a bump to 51. You notice here, it's going outside of the Bollinger Band. So some really extreme closes here. It's approaching overbought, coming off of working some ugly, repeatedly oversold conditions. So this thing has not had a superstar profile since the fall, and now it's going up $4 in a hurry. Now, what do we say about India? You can tell it. I think it's done a lot here. Even for the dead cat balance, my full valuation would be around 50 half. So I would have acknowledged this Bollinger Band. Nice momentum here. And potentially, again, there's a reallocation of markets. China's leading Europe with the tariffs and how that approaches the United or views the United States and their prospects. Viewers or traders and investors are looking at other markets differently. So, it's less risky and so on and so forth, and what their correlations and factors are. So, India looks, in the short term, it's had a sharp bounce. The chart overall, though, looks like the country has some issues, but you always like to see this kind of progression. It could always be like this, though, this kind of a rally like it had from November to December and then roll over. This 200-day moving average looks extremely heavy at 54. I wouldn't personally chase it here. I think this moves towards 49.5 or so over the next 2 to 3 weeks. I think they had their time in the sun. But India, the big multiple sigma mover today, the only one to the upside. Now to the downside, yikes, Turkey. My gosh. So down 7.5%. That is massive. New 52-week lows for this country. I do not look at Turkey a ton, but of course this came up in the scan today on every measure. Don't like this. 200-day moving average really hadn't been falling out of bed, but really a lot of volatility with the corruption, it seems, in the country. This thing's fell from 38 to 30 just in the past, handful of days. So, like I said, mayor getting arrested of Istanbul, oversold, although that's nothing new for it. Happened in October, happened in August. Crazy. To the upside, I have on a different time frame, Bollinger Band. About 38 is to the upside of the Bollinger Band. And to the downside here, I have about 33. So really you got just amazing volatility expansion. Here is going to the upside up until the 17th. And then really things fell out of bed. See, that's what I'm talking about. The 200-day moving average is a very important level. It had 4. It's almost like a rock. You throw it across the water. It's got a couple dribbles above, but then it's going to run out of momentum. You see this loser profile, and then it has just about this. 4 closes above it, and then it goes lower. What's the scary part is if you're there 1, 2, 3, 6, 9 weeks, then, if it looks like a duck and it smells like a duck and it walks like a duck, it's a duck. So that's the problem with the S&P. If it stays there for, a month, 2 months, it's a loser. It stinks. So that's what my fear is. I don't think it's going to happen, but the charts right now, this is day 10 or whatnot. Turkey, nothing new for this. This thing's been really garbage since August. Not going to spend any more time on it. I don't think it drops too much more, but God knows there could be news over the weekend with the government and it gets worse. Other stuff that got sold off today, hard silver down 1.5%. This has had a nice run, especially from February 28th. I'm looking at the ETF here, $28 all the way to a peak here 3 days ago of $31. It's come off a bit, down 1.5% today. Of course, gold, the really star performer, but silver is doing decent as well. I think this is in distribution mode for the next 2 weeks or so. It potentially has some, uglier sell days down to about 28.5. I expect this February 28th low to hold, but I do see this being in distribution mode to at least 29.25. I don't think silver will be in vogue for the next 2 weeks. It may hang out right around here on 30, but I wouldn't be shocked if you get some volatility like you did today and it sends it down to about 29.25 or so, and that would be your entry in an otherwise very nice looking chart, especially where you want some metals exposure. And then this one's a dog. We've been talking about ITB. This green little carrot here denotes new 52-week low. This thing is ugly. Half of it looks like that Turkey chart, but no reason to own this December 13th. That's where it started to exhibit and show these oversold behaviors, where it had it for till January 13th. This subsector was on deep discount on sale for a whole month. And then people figured out, and they got the memo January 13th, and they said, hey, and it went from 100 to 110, pretty much within a rock's throw. Referring rocks again. If you smell, because the rock, I did it again. Yes. I love rock music. I'll think of something else. I love Rocky Road. So this got close to the 200-day moving average, and then, wow, fell right out of bed. Lower lows, lower highs, ugly. And now you actually touch outside the Bollinger Band at the low today at $93. So now what for a otherwise very ugly area of the market? I would expect this to base. I think it's going to take a little bit of time. Today wasn't very encouraging, down 1.7%. I expect this to base potentially around the 92 handle. So I don't think it's done yet to the downside. It potentially has a little bit to go, as you can see here. Uncharted waters essentially in terms of the year view. I can see it going a little bit lower. The chart does not look friendly, and it looks like it wants to curl a little bit lower to about 92. After that, I do see it moving up towards 98 again if you're trying to put on a tactical trade in a loser But we'll look forward to base this week around $92 or so. And then I think that'll be your entry if you're looking for hot mess. All righty. Top 3 gainers of the past 5 days. No repeating charts. Number 1 area of the past week, India up 5%. Okay, so we talked about at the beginning of the show, up 1.5% or so today. It's up 5% or an average of 1% a day for all you good math home gamers. So India, the place to be in this week. No, it was not the place to be. Literally one of the worst places you could be up until earlier this month, and now a sharp rally. But we already talked about that chart earlier in the show in terms of its prospects. Second best place to be in the market, Ark, up 4% this week. Very important point what it's doing here. So hopefully what is happening here is what we are expecting to see with SPY. What am I talking about? So we fell out of bed here March 10th, but look how quickly Ark has reclaimed its 200 moving average, which is still going higher. Same thing with the S&P. And these guys topped with the market mid to late February. That's what you want to see, a quick rebound, as it will. You don't want to see your star player. I'll refer to, my SGA, Shai Gilgeous-Alexander. You don't want to see him have, 6 games in a row of 3 points a game. That sucks. Then you're starting to change his opinion where he's hurt. Exactly. The market's hurt. Something's injured. When you get back to this, he just had a bad couple of days. Maybe a girl didn't text him. Maybe shorty in another town. I'm not really sure. But what happened here is this has now reclaimed it just barely with 1% to go at 51. There are worse charts to be in. It's reclaimed. It's 200-day, as I said, still rising. Ark here, however, similar, exactly like what I said in the market, I think has maybe a little bit more to go, potentially to about that 52.5 level, 52.75. And I think that is a lot that you ask of it from 47 all the 52.75. Basically what I said with the open of the show of SPY, it's going to get hopefully to that 575 point. And then it's going to be a lot of frustration after that. That's what I see similarly in Ark. So a lot of microcosms, no narrative, just true charting is what's going to happen here. For these old superstars, it's going to take a lot of exertion to get back to just 200-day levels, and it's typically not what you want to see. It's not the strongest performance you can have, and there's other better spots to be. We'll look at them at the end of the show for the best spots to be in the past 52 weeks. And the other third best spot to be in this week, so it was India up 5%, Ark up 4%, and the XLE up 2.5% this week, down today almost about 0.75%. This thing, a sharp rally off the lows of March 5th, March 6th. This thing was $85, we'll call it. And this sprung all the way to $93, did XLE. Now what? So this may have a little bit more to go towards $94 to $95. Okay, I think it may want to go a little bit more and try to tangle with those January highs. But again, the 200 moving average is still going south, almost flat here. It's at 90 even. But after that, I do think this moves exactly towards that 90 even, potentially 89.75 level. So potentially a little bit more upside, like another $1 or $2 upside, maybe $1 upside rather, and to the downside about 2. So not great risk reward if you're going to chase long there. In otherwise, kind of southern moving trade here. Okay, top 3 losers of the past 5 days. You like to see this if you're bullish, right? In your portfolio, the biggest loser, Volatility, VXX, a nice contraction. Today down just 0.5%, but on the week down 5% or an average of 1% per day. We clearly peaked in fear or in volatility March 11th at 60, did VXX. Again here, so the 200 moving average is climbing. Just for simplicity's sake, I'm going to call it 47.60. We are holding it just barely by 1%. As I said earlier, I expect a bullish accumulation for the market for about another week or so, which would coincide with this having a distribution phase or a bearish momentum for about the next week or so. I would say potentially to about $44 or so. I do think it falls below its 200-day moving average next week to right around where my cursor is here. The bad news is here, the opposite of what we're saying with SPY and a lot of these other charts, is going to exert a lot of energy to get back to its 200-day moving average. I think 45 or so is the least it's going to be for VXX, and that's going to try and tangle again with that 50 line. So vol is back in when you have these fear of tariffs and the market doesn't know what's going on and when they're happening or getting delayed and how damaging it's going to be. That's volatility is going to be the name of the game. It's going to be elevated more than it was, say, back here in December. All right. Second biggest loser, natural gas, down 4% this week. Okay. It's down 1.5% today. This group peaked 11 days ago at $24. We've been talking about looking for your opportunities in natural gas. You get volatility in this. I think it's basing right around here. A great entry point would be 2.5, so like 20, right around 20 even. If you were able to get around 20 even, that's to me an amazing level of entry. Still around 4% away from here. I think it possibly bases though around this 21 half level, and it goes higher on Monday. The target still is right around 24.80. So I still do see this has great momentum. The curl and the 200-day moving average is awesome. Beautiful looking chart, largely above 50 RSI trading since election day, essentially. And really a change for this group literally as of New Year's day, essentially. It really started to get strong with that breakout above $19. So if you get in at 20, wonderful. A slew of derivatives trades you can do. These are cheap, the UNG, so be careful what margins required and what you're doing against in terms of stock. But a nice one here. Again, if this starts to slump a little bit on Monday, an awesome position would be, by check again what the pricing is on it, but you could buy 20, 24 call spreads. This thing moves, or you can tighten it up. Depends how much you want to make on it, but something like that. Right now, the stock's trading 21. So the UNG, the second biggest loser this week, down 4%. And then, of course, you cannot ignore China, a big fall this week. KWeb was down slightly more than this. I went with FXI because it is the big kahuna and the most liquid. But these guys peaked. We're talking about China peaking or hitting new highs, rather. And it did on this week at, call it $39 in FXI. And then a quick drop off. They could not follow up on the day after. On the 19th, they did not do it. And then sharp drop, not sharp drops, but down 2% from what you saw from a 52-week high. So what do we see here? This is a absolutely fire trade. And I'll give you a little teaser. It's the best trade since last March. I think this is in distribution mode. The chart looks like it wants to give back for about 2 weeks or so, potentially with a floor of $34. Similar to what I said, to get into a superstar like UNG at $20. If you can get into FXI at 34 even over the next 2 weeks or so, I think there's actually a strong chance it happens, especially if their S&P and the United States catches a bit of a bid next week. They'll drop this, and you could easily see it go into 35 half. And I think you could go to start these early March bottoms at 34 even. All along, though, the 21-day exponential moving average is 36.40. So even around here is not a bad entry. And this was the prior 52-week high, though. Understand that you do want to see that hold. It's technically just at that marker here. This was the absolute extreme euphoria when she announced the stimulus back in the fall. And we're just at that level here. You got to be careful. If it fills that gap, it's okay. But I don't want to see it really drop much more. And I think this is going to make it hard for traders because I think it does drop more next week and then give you an opportunity. Again, the 200-day moving average is way away at $30. So again, top losers of this week: Volatility, Nat Gas, and China. Vol, recent winner. Nat Gas, peaked this week or last week rather, and FXI peaked this week. So there's where some of the selling was from old performers and new. Best 3 trades of the past 5 days. So short Vol down 5%, long India up 5%, and short Nat Gas down 4% was your perfect portfolio. Short Vol, long India, short Nat Gas. So a lot of things that you could do. You could have shorted India puts, that would have paid handsomely. You could have shorted UNG calls. That would have traded and paid you off very, very well. All right, and this is going to be a smooth segue. I will get to you, Gaston. At the end, I got to do the my very exciting favorite part of the show. Best 3 trades of the past 52 weeks. This is for emphasis. This is not flash in the pan. These are best performing trades in absolute terms, long or short, from March 21st, 2024 through today. Number 1, looking at it already on the screen, FXI up 52% in 52 weeks. I think Rocco, no, he's dumb and pees everywhere. Very small walnut brain. Nice guy. Good dog. Bit of a mimbo. 52% for 52 weeks. That's about 1% a week. So just an absolute superstar FXI. I think it's in distribution for about another 2 weeks. I think this has had a just absolute monster rally, honestly, since early March. It's 34. I look at the rally at the short term from 34.5 to 38. That's a monster move. The only other thing here is it hasn't bucked beneath its 21 exponential moving average on corrections, on givebacks since mid-January. You would need to see that trend, reverse itself and to see it break underneath its 21-day. I I think it does a little bit more. I do think it touches 35 and potentially even 34.5, and that will be your entry into a superstar, the best performing ETF. It's not Bitcoin, it's not Qs, it's not whatever you want to name it. It is FXI, the best performing. It's not KWEB either. It's FXI, best performing ETF in the past year. Number 2, G to the D to the X, your gold miners. Okay, the juniors were basically a match with this, a touch percent higher return. It's 48% here for GDX, so just a little bit behind FXI. These guys peaked this week at 45.65, a little bit of give back. So like I told you about FXI, your chance to get into a superstar, it's going to be a little bit precarious. You're going to be tested. I think it's going to break some short-term trends. But I think you do it in China, especially because of the upside and the kind of bias you have here in the States going forward with the uncertainty. Here, gold miners, I think this is in a short-term distribution mode for the next 2 weeks, and you'll get your chance for this around the 42.5 mark. I don't think it gives back more than these February lows. So February highs rather up here. So I think that's as good as it gets. And then full term target is still $45. So that will be your entry again around 42.5 to 45. I think this is not in vogue either for the next 2 weeks. I think today you saw a little bit of it down 1.5%. This is the second best trade on the books of the entire past year. Gold is up less than this. Gold is up 38%. GDX up 48%. It is the place to be, the gold miners. And then number 3, we just talked about it. Not going to kick a dead horse here, but it's Nat Gas up 36%. Okay, so these are your big winners. Liquid, 1X. I'm not doing crazy leverage stuff. The places to be have been since last March. China, gold miners, natural gas. Not a lot of straight U.S. exposure for that. Of course, yes, natural gas. It's called U.S. natural gas. I'm talking about correlation with U.S. Stock market, where the concentration is Apple, Microsoft, NVIDIA. You get the picture. It's China. It's gold miners. It's natural gas. So natural gas, like I already told you, 20 would be an absolutely awesome entry. Anything sub 21 is decent. And again, the target is still right around here, about 24, 25. I do see new highs with this. It has a lot of great looking momentum. Okay, Gaston, thank you so much for hanging out there. He's asking me about Visa. Let's take a look at Visa. We are all familiar with Visa. So these guys peaked March 3rd. So it's interesting, just off the bat, we say Visa, obviously very tied to the consumer, and American Express is the higher consumer, higher end consumer. So with less fear around this, Visa, more to the common everyman. That being said, these guys peaked at March 3rd, 366.5, and then a sharp give back all the way down to 327, and now a bit of a rally and more give back to 335. Large periods for overbought. Stands out on the chart here. Overbought for 3 weeks here. Piece of the winter over here. It did it again in November. So long lines to buy the stock. Never oversold at all year. I obviously know that you want to go long on this, buddy. I'm pretty sure. Yeah, this looks great. An entry under 340, I think, honestly, is wonderful. I think it's already spent its time trying to base here this past week. Volatility for the market goes 320 what? What's your question? Did I misspeak? It's been a long week. Put for entry. Ooh, 320 for entry. I don't think you're going to get that. I don't think you're going to get that. To be honest, that would be amazing. I say honestly, something south, anything under 340, I think is a great entry. To me, the target on this is still 350 to 360. So, but it's going to need market patience, of course, and momentum. So, and I think, like I said, the market overall goes higher next week. I think these were oopsies here and forgiven levels. I don't think you get sub 330. I think you need like real market fear for that. So I don't think 320, if you're waiting for that, I think you might be waiting a while. I think under 340, honestly, is a good, you might have 1 or 2 bad days in the red, maybe more, but I don't think in time it's a bad entry in an absolute superstar stock. Every reason in the world to own this thing since end of August. And the objective, so about 2 to 3 weeks. I mean, I've got a conservative and a less conservative. I think 350 looks like the target, and there's a possibility to get to 360. I don't really want to call in this environment with a lot of fear, and the Visa's obviously international, but a lot of U.S. exposure as well. I don't want to call for new 52-week highs of this to 367. It could, but I do think 350 is a much safer objective. So I like the entry under 340. And I think it takes a 350. Again, in this market, it's not going to be like straight just buy calls on Qualcomm or even Visa or whatever. So the moves aren't going to be vast. I'm looking for 2% in the S&P tops. And even like, what was the ATR on Visa? A $300 stock, $6. So not a ton of, a mover this comparatively, but definitely a great looking chart. And I think it is on, you're getting a discount here. All right, so that was it on the week. Have a great weekend, y'all, and enjoy March Madness, whatever it is that you do. I'm going to try and rest up. Bye.